Hi, good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore, the 21st of August 2015. Looks like we are actually coming into a sea of red in early morning trade where Asian markets are concerned. Although, as we speak, we are reversing that move from China's A50 that opened down sharply, down to hitting a low of 10,200. We are seeing that index hovering very close to its high now. Whether this will be able to pull off a rebound of sort remains to be seen. We are seeing that we're seeing this move pulling up the Japan 225 futures here, trading closer towards the top end of the range. Now, it's still early days. A reason for the early panic, or rather early sell down, was a follow through from overnight. Overnight, we saw US indices or US stock markets down there hitting a fresh 2015 low. Let me just pull up the SPX or the S&P 500 for a look here. We are seeing markets, and this is the 15-minute chart. Let me look at just a 1 day from a perspective point of view. You see this big candle down here. Just this big move last night has breached this support here, and this support down here. All so-called critical levels, because that range, as I draw this line here, has more or less been held for a good part of this year. Well, at least from March or early February, for that matter. It remains to be seen whether this has momentum or the downdraft will have momentum or not. But several reasons for this. Going into early US trading last night, we had several big haircuts in Asia from Japan, China, and obviously some of the smaller Asian markets. Then we've got the devaluation of the Kazakhstan's tenge, and while Kazakhstan is not a big player in the world's economy, it is a victim of a chain of events, and part of the chain of events that was triggered by the Chinese devaluation of the yuan or renminbi last week. So whether this is going to be a more significant contagion effect or not, certainly markets are reacting in some ways to what this is clearly suggesting. A new fallout down here. Now, if you look at the S&P, this big breach last night is also quite significant in a sense that, well, for one thing, we're well below the 200-day moving average, and the other thing is that, you know, it is below this so-called trend line, or this rough trend line that I've just drawn down here. Don't forget, the S&P, like most American indices, are close to a 7-year high. A 7-year high that has been led and intoxicated by the excess of cheap money. Now that looks like it may be reversing if Mrs. Yellen is still going to continue with her rate hike either in September, October, or in December. It doesn't matter, but we are at potentially a turning point down here. Now let's look at some of the other fallouts that's actually happened. On the back of that move, we saw the German index down here, the DAX also, and this is a continuation of what I spoke about in yesterday's YouTube. They breached the 200-day moving average the day before, and we saw a continuation move down. We are in this so-called zone. I call this a buffer zone. Buffer because of this air that has managed to be held in terms of that low versus this high down here. Again, I'm looking at this point or the 10,000 level being tested. If we can see momentum follow through. Early last night, or rather late last night, early this morning, we saw the Greek Prime Minister, the fresh Prime Minister from early this year, Mr. Tsipras himself, resigning or threatening to resign. But essentially, whether that's a good call or a bad call, it just adds to the uncertainty of it all. And markets don't like uncertainty. Now, on the back of the previous night's move on the US dollar, the euro dollar has actually firmed up even more, 2 nights in a row again, and that perhaps could have caused or may have caused the sell-on in the DAX purely because German companies like BMW, Volkswagen and all don't like a high euro because they have to actually export at a cheaper margin to their profitability. So that knock-on impact is actually seeing its effect across the world. Look at the VIX. The VIX, or the volatility index, shot up last night, and this is clearly in reaction to the wild swings that we saw in stock markets in the US, especially the S&P. The VIX, incidentally, this is the September futures, is at a low here, this range, for the longest time, and this coincides with the 7-year bull run that we've seen in the stock markets. So clearly last night's big spike up on the VIX has highlighted the fact that people are willing to buy and starting to buy in insurance on their equity positions. Coming back to local markets, Keppel Corp, a name that I've talked about purely because I've got this on the chart, and purely that this chart has been, was drawn quite some time ago. Again, that key level of 690 has been broken, and immediately we are seeing a gap down here at 677 or so in very early trade. Now, again, whether this has a legs for a rebound like we've seen being led by the Chinese markets, and then also now increasingly the Japanese markets, remains to be seen. But last night, oil did not move too much, but yet stocks like Keppel Corp, who are oil-related plays, are still being whacked down hard, purely because in the note we put out yesterday, not purely because, in the note we put out yesterday, I've tried to explain where that the indiscriminate supply of stock is coming from, and I'm linking it back, or we've linked it back to the influence of ETFs in current day market environment, and their ability to actually move markets because of the multiplier effect that it has, and the mobility that investors have to actually get in and out of such products. So please look into it. It's on our early morning page. Our website or our blog. Finally, I have to also mention about Noble once more. It's in the news every day. Yesterday we saw these two so-called doji-like candles, and now we are seeing a nice bounce above that. Now, Noble is something that we've talked about, and we've been reasonably negative about this for a long time. And the market obviously knows the story, and the two big forces of the company supporting the stock price or trying to talk the stock up, and then short sellers like Iceberg and Muddy Waters trying to talk the stock down. The stock has across the time been suffering in price, in halving almost over the last 6 months or so. Now at this point it becomes again a point of inflection, because it has been reported that short sellers for the company amounts to about 14 to 15% of outstanding stock. That's about 980 to 1 billion shares outstanding that has been in the hands of short sellers. Now that in turn creates a potential spring that if they were to be forced to cover their short or be squeezed of their shorts, this thing could actually bounce back quite fast. Now, on the one hand, I'm not suggesting that we should look at it and be bargain hunting or be buying at this point in time, but clearly that's a potential force to be reckoned with. The other side of the force is something that we know already and has been plaguing the company, which is the questionable finances or financial accounting systems or systems that they have in place, and that has deteriorated even so in the last 3 months, made worse further by the rout in the commodities markets that Noble is traditionally exposed to. So it'll be interesting to see what bankers of Noble will have to say with regards to the outstanding lines that they have to Noble, but certainly those are forces to be reckoned with, both equally strong on the upside or the downside. So with this breakup above this doji green, I would say let's wait and see. 3 days of green does not mean that things are going to reverse, but clearly, holding above this line of 43 and a half is something a bit more comfortable than we've had, for some time. But besides that, it's Friday. Market don't like Friday, or don't like Fridays because of what the weekends or what uncertainties the weekends can bring. But it remains to be seen what's going to happen. Very quiet on the so-called news release front. But besides that, thank you very much.